All right, let's dive in. We're going to break down a really important briefing today, one that gets right to the heart of how our entire global financial system actually works. And the central argument is that a huge, almost invisible shift is happening right now, right under our feet.
So what's the big idea here? Well, it's pretty simple. A financial reality that we've all taken for granted for half a century has basically come to an end. The old playbook, the old rules for what's safe, is being completely torn up and rewritten as we speak.
And this whole thing kicks off with a statistic that just stops you in your tracks. For the first time ever, as of 2026, the U.S. government is spending more money just on the interest on its debt than it does on its entire defense budget. Just let that sink in for a second. The interest payments on the national credit card now cost more than the Pentagon, every soldier, every ship, and every jet combined.
Now, the source material gives this new reality a really powerful name. It calls it the mathematical event horizon. I know, it sounds like something straight out of science fiction, right? But once you look at the numbers, it's actually an incredibly accurate way to describe what's happening.
You know, the parallel to physics here is kind of perfect. In space, an event horizon is the point of no return around a black hole. Well, in finance, it's the point where the gravity of compound interest becomes so strong that the debt just starts growing on its own, way faster than the economy or tax revenues could ever hope to keep up. The debt's own internal math has taken over the show.
So to really get how we got here, we've got to rewind the clock a bit. For 50 years, the entire global financial system has run on one simple thing: trust. And at the center of that trust were U.S. government bonds, Treasuries, which became the default setting for safety for the entire world.
It all goes back to 1971, when the U.S. cut the dollar's final tie to gold. From that moment on, money wasn't backed by a physical thing. It was backed by a promise, by trust in the U.S. government. So the rest of the world held dollars and treasuries, not because they loved them, but because they had to. It was the operating system for global trade. And now, that very foundation of trust is starting to crack.
Okay, so what exactly broke this system that had been working for 50 years? Well, it wasn't just one thing. It was two massive forces that emerged and started to chip away at the foundation of trust and, maybe more importantly, the idea that the system was neutral.
On one side, you've got political risk, the weaponization of the system. Suddenly, it became clear that the dollar system could be used to enforce political goals through sanctions. And on the other side, you've got pure economic risk, the dilution. To pay for this mountain of debt, you have to print more and more money, which devalues the currency for everyone holding it.
And this quote just nails the lesson that other countries learned from all the sanctions. It forced them to ask a really uncomfortable question. If our nation's savings can be frozen overnight by a political decision in another country, are those savings really ours? And that, right there, shattered the illusion that the whole system was just a neutral tool for commerce.
Now, the fallout from breaking that trust is absolutely enormous. It's kicking off a massive, yet mostly silent, repricing of risk all across the planet. We're seeing capital begin a huge migration away from assets that are basically just promises to pay and towards assets that represent actual proof of ownership.
And the numbers we're talking about here are just mind-bending. There's roughly $85 trillion of global capital parked in these paper promises, mostly U.S. Treasuries, that for decades were considered the safest place to put your money on Earth. Now, that entire ocean of capital is being forced to ask, wait a minute, is this really risk-free anymore?
And the source material has this killer line that sums it up perfectly. The thing you bought for safety, the risk-free asset, has now become return-free risk. You're not getting a real return, but you're definitely taking on new and unexpected risks.
This really all boils down to a concept called counterparty risk. See, when you own a government bond, you're counting on that government to make good on its promise to pay you back. They are your counterparty. But if you hold something like physical gold, there is no counterparty. There's no promise. The value is just there.
And you can see this return-free risk in the cold, hard math. Let's just do a quick example. Say you buy a bond and it pays you 4.5%. Sounds okay, right? But what if the real rate of monetary inflation, the rate at which the currency is being diluted, is actually closer to 7.5%? Well, your real return is -3%. You are literally paying the government to take your money. That's a concept called financial repression.
So, if the old definition of safe is broken, then what's the new one? Well, this is where we start to see that capital migration in action. Smart money, and that includes central banks around the world, are quietly rotating out of these paper promises and into a new kind of defensive portfolio made up of hard assets.
So, where's the money flowing? Well, this briefing highlights three main destinations that are starting to form a new defensive core. And you'll notice they all have one thing in common. You can't just print more of them. We're talking about physical gold, digital assets like Bitcoin, and strategic real-world commodities.
First up, let's talk about gold. But the crucial detail here isn't just owning gold. It's how you own it. We're not talking about a paper IOU. We're talking about allocated physical gold, as in a specific numbered gold bar that is 100% yours, stored securely outside the traditional banking system, ideally in a neutral country with strong property rights.
I mean, think about it. Why would you hold your insurance against the financial system, like a gold ETF, inside the very system you're trying to protect yourself from? As the saying goes, you don't want your insurance policy to be trapped inside the burning building. Okay, next up is the modern take on a hard asset, digital bearer assets, with Bitcoin being the prime example. And what's fascinating is the shift in perception here. What was once brushed off as just a wild speculation is now being seriously looked at by major institutions as a form of digital gold.
And you can see why when you look at its properties. It's non-sovereign. No single country controls it. It's incredibly hard to censor. But the absolute killer feature in a world of infinite money printing is its fixed supply. There will only ever be 21 million Bitcoin. Period. That is absolute, verifiable, mathematical scarcity, which is something totally new.
And the third asset class brings us right back to the real physical world. It's about owning the actual stuff that the economy runs on. Things like energy, critical minerals, productive farmland. The logic is simple. If the value of money is going down, you probably want to own the real things that can't be created out of thin air with a keyboard.
So all of this, it leads us to what might be the single most important question for any investor or saver over the next decade. In this new world where the old rules of safety are out the window, what are you going to use as your financial anchor? At the end of the day, it boils down to a fundamental choice between two things: promises or proof. Are you going to anchor your wealth to the promises of governments and central banks, promises that are subject to politics and human error? Or are you going to anchor to the immutable laws of physics in something like gold, or the immutable laws of code in something like Bitcoin?
So we'll leave you with that to think about. The 50-year experiment of a financial system based entirely on trust in a single promise is coming to a close. This $85 trillion repricing is already underway. So the question for you is, in this new era, what will you choose as your anchor?